So today let's try to study the case of GameStop. Okay, so let's try to understand that what actually happened in this entire GameStop saga from starting to end here. Okay, so we can study these kind of cases with ChatGPT as well. They will give you very good information and you can learn from them. Okay, you can learn along with ChatGPT as an investor that what they did which was right or what was wrong in all of that. So you can think about all of that. You can discuss all of these things with ChatGPT, and then you can learn something from that as well. Okay. So what I will write here, let's talk about GameStop. Let's talk about GameStop investment case of GameStop from beginning. Okay. So the GameStop saga, a modern classic in financial history. Okay, let's break it down step by step from the very beginning, both from the fundamental investment case and the meme stock phenomenon. Okay, so what actually happened? So the origin. So how it all started here, the GameStop traditional business. Okay, so there is this company called GameStop Corporation, and it is represented by GME in the stock market. Okay, so it is a brick and mortar video game retailer founded in 1984. Okay, its core business involves selling new and used video games. So this is a kind of company which has a retail store and they sell video games, consoles, accessories, offering trade-ins and resale services. Okay, then by the 2010s, the business faced two major headwinds. Okay, the shift to digital download. So a lot of people nowadays directly download from Steam. Okay, Xbox Live, and these are different platforms from where now people can directly download their games. Okay, so it affected their business. And the second thing was declining physical retail foot traffic because of Amazon and e-commerce. See, even if someone wants a physical copy, they can order it from Amazon. Okay, though they don't need to go to retail stores. Okay, so these were the major reasons why their business got affected. Okay, the company's sales started declining, stores were closing, and the stock price slight halt. And then by 2019 and 20, the GME looked like a classic value trap, cheap but for a reason. Okay, so that was here. So this was happening. Now, when this was happening, there were hedge funds who were betting against it. Okay, because see, everyone know because of these reasons that they are failing as a business. Okay, so what hedge funds do, hedge fund but bet against it. So what does this mean? See, this means that they are shorting against GME. They already know the stock price is going down. Okay, so what happens in shorting? In shorting, hedge funds will sell the shares. Okay, they will borrow the shares from the market, and then they will sell the shares. Okay, borrowing and selling is different here. Okay, borrow the shares and then sell the shares in the market at a high price. Then they will buy back the shares at a lower price. So hedge funds are betting that the price of GME will go even more down, and that is why they are selling at a high price. Then later on they will buy it at the low price. Then the difference between that would be their profit. That was simple, in simple term, shorting. And that is what hedge funds were doing, that the stock price will go even more down. Okay, so they were the short sellers. So who were the short sellers? Mainly hedge funds. Okay, because they believe the business model was obsolete. Because of these two reasons, either customer will buy from digitally, or if they want physical copy they can buy from Amazon. Okay, management was uninspiring and COVID-19 would accelerate its demise. So because of COVID-19 they think that it would accelerate even more. That is why by late 2020 short interest was over 100% of the float, meaning more shares were shorted than were actually available. So this point was important. See, by late 2020, what was happening? That hedge funds were shorting shares, okay, more than they were actually available. Okay, now this extreme short interest created the condition for a short squeeze. I already talked with you about short squeeze before. Okay, that what actually happens, that in case that if the price goes up, okay, and one person is let's say selling the bond, okay, let's say one hedge fund is selling the bond, okay, so hedge fund buy in large quantity, they sell in the large quantity as well. Okay, so if they start buying hedge fund stocks again, then the other hedge fund need to buy as well, other hedge fund need to buy as well. This will create a short squeeze. Okay, in short squeeze, that if the value, if the if the stocks are shorted more than they actually available, okay, that means this can be problematic. Okay, now then what happens, the bull thesis. Okay, so this is where the people like Ryan Cohen and Roaring Kitty, they enter. Okay, and what they did here, they were the important people in this entire story here. Okay, and what they did, they were the people like co-founders, and Keith Gill was a as a known by the name of Roaring Kitty. Okay, so these were the Ryan Cohen was the co-founder. Okay, he already have a e-commerce, and he have better capital allocation, and he know a lot about digital first strategy. Okay, and on the other hand, Ronin Kitty owned a YouTube channel, and he was a individual investor who post deep dive research on GME. Okay, and he also claimed that the market is undervalued. Okay, and there is a potential turnaround. The short interest was absurdly high. Okay, and if retail investors coordinated, a short squeeze could trigger enormous price appreciation. His research combined sound financial logic, value plus catalyst, with infectious enthusiasm. Okay, so this is these two people which were important. Now, because of this, what happens, that there was a third place, a third important factor, which was a Reddit Wall Street bet. Okay, this was a Reddit available. Okay, and on this place there were a lot of retail investors, and they noticed the short setup. Okay, and this started a social movement, which is to buy and hold GME. Okay, and force shorts to cover at higher prices. So if they started buying uh, and holding GME, so what will happen? They can actually force shorting. Okay, and which will lead even to higher prices. Okay, and symbolically fight Wall Street hedge funds. So this was like a battle between normal people, retail investors, and the powerful people, hedge funds. Okay, so from under $20 in early January 2021, the stock spiked to an intraday high of $483 on January 28th. This wasn't driven by fundamentals, but by supply demand mechanics and short covering. Okay, and then what happens after that? After, what is the aftermath? Post squeeze, two narratives emerge. So there were two narratives after this squeeze here. Okay, the fundamental case and the speculative case here. Okay, understanding these two is important. Okay, the fundamental case is Cohen revamped the board. Okay, focus on e-commerce transformation, exploration of NFTs and crypto partnerships, reduce debt and increase cash reserves. That is what the fundamental case with this after post quiz. Okay, what was the speculative case? The so what investors speculate? Retail investors see GME as a movement rather than a business. Okay, price movements often disconnect from earnings or operations. Okay, and this is very common in stock market, that many times prices can go very down or go very up with respect to the revenue of the business, the value of the business. Okay, and this meme stock status lead to high volatility. Okay, because of this become a meme stock. Okay, the GME become meme stock. There was a very high volatility because a lot of people were buying into it and trying to cause this a short squeeze. This becomes a cultural phenomena. Okay, then where it stands now. So what happens after that? So GameStop has evolved into a kind of a hybrid. Okay, part traditional retail is still operating stores. Okay, so there are traditional retail which are still operating stores, part speculative meme stock, part turnaround bet on digital gaming and NFTs. Okay, so now the original thesis, short squeeze plus turnaround, has mostly played out, but new investors tend to focus on Ryan Cohen's leadership, potential new business models, the enduring power of retail investors enthusiasm. Okay, so this is what the new investors believe in. They still believe in Ryan Cohen's leadership and these new business models and this. Okay, now if you want, so ChatGPT is telling me that if you want, I can break down Roaring Kitty's original thesis more deeply, walk through the timeline of price actions, or explore the financial before, during, and after the squeeze. Which part do you want to dive into? Okay, so now we can go even deeper into these things here. Okay, to study this GameStop even more here. Okay, so which part I want to move into? So I want to move into this through the so I want to talk about the second point here. Okay, walk through the timeline of price action. Okay, so walk through the timeline of price action. So this will give me a timeline, proper timeline from starting to end. That Mhm. Okay, so now it is giving me an answer here. Okay, so as you can see, absolutely, let's walk through games stop's price action timeline from a high level, especially around the famous short squeeze and beyond. Okay, so I'll break it out into eras so it is clear. So there was multiple eras. So you can say 2019 to early 2020, the value trap phase. So what happens at this time? The price was $5 to $6 per share. GameStop was struggling, declining sales, store closure, and existential threat from digital downloads. Hedge funds piled into short positions, betting on bankruptcy. Okay, then August to December 2020, the Ryan Cohen catalyst. So at this time also the price range was between $4 and $20. Okay. So in August 2020, Ryan Cohen reveals a 9% stake. Okay. Investors speculated on an e-commerce pivot, starting the first mini run. Okay. And then short interest kept climbing, surpassing 100% of the float. December 2020, Cohen increased his stake and started pushing for operational overhaul. Okay, so this is what was happening at the time of Ryan Cohen. Okay, and he started a 9% stake and surpassing 100% of the float. Okay, and then in December 2020, Cohen increased his stake and started pushing for operational overhaul. Okay, then the short squeeze mania started from January 2021, where the price range started from $17 and reached up to $483. Okay, at January 11, the GameStop announces Cohen joins the board. The stock jumps from $19 to $31, and in January 22 to 25, price jumps from $43 to $77. Okay, fueled by Reddit and Wall Street bets high. Okay, this is what happens. Then in January 27, stock hits an intraday high of $483. January 28, several brokers, including Robinhood, restricted buy orders. So this is what's important here. Now, because of this, that brokers are the one through which retailers can buy stocks here, and they stop the buy orders. So what this happens? The price crashed down to $112. So this part was important here. So this was the peak. Okay, this was the peak for this one here, short squeeze meet social movement. Okay, that is the movement here. And then after that, from February to March 2021, post squeeze volatility, price range between $50 to $260. After the short squeeze, the stock swung widely. Another rally to $91 to $265 in one day. That also happens in February 25. And then large retail traders stayed active, but the volatility became more speculative. Okay. And then after that, by mid 2021 to end, meme stock identity. Okay, so GameStop issued new shares, raising capital. Cohen began restructuring leadership, bringing in Amazon style execs, okay, and executives. Reddit and retail sentiment kept the stock elevated regardless of financial performance. Then in 2022, it backs to fundamentals here, and the price range from $80 to $150. Macroeconomics tightening and rising rates put pressure on speculative stocks. GameStop announced NFT marketplace plans, which sparked occasional pops. Meme stock enthusiasm warned compared to the 2021 frenzy. Okay, so this was happening in 2022. Then in 2023 through early 2024, flattening and reality check. So the same thing happens. So by 2023, the price range come back to $12 and $30. Fundamental struggle to catch up with valuation. Okay, because price was very high, and GameStop will still shifting strategies, but revenue remained underwhelming. Stock lost much of its meme stock buzz and short interest normalized. Okay, now what was the, this is the summary of key levels here, that what actually happened. So Ryan Cohen stake reveals, these are the important events here. In August 2020, price $4 to $8. January 11, 2021, Rohan Cohen joins the board. Price $19 to $31. January 27, 2021, all-time high intraday for $83. February 24, 2021, second short squeeze happened, but there was a mini peak to $265 intraday. Mid 2025, meme stock plateau $140 to $250, and then by 2022-23, decline with market normalization back to $30 to $12. Okay, so this was happened here. Okay, now in these kind of situations, There were retail investors, okay, and there were hedge funds, okay, and both of them have their own theories that what actually happened here, okay, and as an investor, what you can learn from this case here, okay, what you can learn here is that you should always uh, think before making any kind of action, okay. E- Even if you are a retail investor, okay, if you are a retail investor and you join this kind of community here, okay, then you should listen to them, okay, what your community is saying. You should think about it properly, but in the end it is your hard earned money that you are investing, okay. So what actually happened is the point that people have a lot of theory about, okay. At this point, people have a lot of theory that hedge funds did something from the background, okay. These are the rumors, okay, these are the theories, okay. And hedge funds are saying they already sold all of their uh, they already buy all the shares, they completed their short squeeze, they completed their shorting, they already completed, they were not shorting anymore. But retail investors said that they were still shorting, and this problem, and they don't want to lose a lot, okay, they don't want to lose a lot. That is why they did something like stopping buy button on the Robinhood. These are the speculations, okay, these are the rumors by retail investors, okay. How much of it is true, how much of it is not, that's a controversy in itself, okay. But at this point here, price keep falling here, this point, this one, January 28th. So several brokers including Robinhood restricted buy orders, okay. So you can ask further, because as an investor, what, even if you are involved in this case as a retail investor, or if you just watch it from far, what you can learn from these things, okay, that part is important here. So on January 28th, Robinhood restricted restricted buy button restricted buy button, okay. uh, why that happened, okay. What were the stories from both retail investors, retail investors and hedge funds? So I am trying to dig deeper into this case here. Excellent question. This is one of the juiciest and most debated movements in modern financial history. Let's unpack it clearly. So what happened on January 28, 2021? On January 28, 2021, Robinhood and several other brokerages restricted buying of GameStop, AMC, and few other meme stock, but allowed selling. So selling was allowed, but they restricted the buying here. Now GameStop stock, which had hit an all-time high intraday of $483 on January 27, plunged to $112 within hours. Just within hours this happened after these restrictions. This enraged retail investors and sparked conspiracy theories about a Wall Street level coordinated efforts. So retail investors think that this is a conspiracy by the Wall Street people. Okay. Then what is Robinhood's official story? Robinhood said the restriction wasn't about protecting hedge funds, but about meeting clearing house deposit requirements. So when user trade stocks, brokers like Robinhood have to front cash to clearing houses. Okay, from where they have to buy the stock, okay, until traders settles, until that particular trades settles, which normally happens in T plus 2 days. The sheer volume and volatility of GME and AMC and other caused Robinhood's capital requirements to skyrocket overnight, okay. Now, the CEO of Robinhood said that our clearinghouse mandated deposit requirements were so large, an order of magnitude more than normal, that we had no choice but to limit buying. Okay, they raised $3.4 billion in emergency funding within days to meet these collateral calls. Okay, now what is the story? So this was the story from the Robinhood side here. Okay, that the reason they stopped the buy button because they don't have the upfront money to give to the AMCMs, to the AMCs here. Okay, to the asset management companies. Okay, to these clearing houses here. Okay, so that is here. Now, what is the story from retail investors? So retail traders didn't buy the liquidity problem. So they don't believe the liquidity problem of Robinhood. Okay, they believe Robinhood backed by Citadel Securities. Okay, that Citadel Securities is another entity which is one of the largest customer and market makers. Okay, and they restricted the buy button to protect the hedge funds, especially Melvin Capital, which was getting destroyed on its GameStop short here. Okay, so there were suspicions fueled by the fact that selling was still allowed. Okay, but uh, to push the prices lower. So their point was that if there was a liquidity problem, okay, then why they stop the selling button as well, so that it could remain neutral. Why keep the selling keep remaining? Because if selling is remaining, then people will sell. Okay, the spread of the restrictions, the speed of the restrictions, and Robinhood's business tied to Citadel, which had invested billions into Melvin Capital just days earlier. So this was the reason they were telling that Robinhood is have ties with Citadel, and Citadel has invested billions into Melvin Capital. And if Melvin Capital loses money, Citadel will lose money. That was the point. So in short, retail investors saw it as Wall Street protecting its own at the expense of regular people. Okay, it became a massive PR nightmare for Robinhood and a core reason why so many people label the system rigid. Okay, rigid. Then that is here. Then we have hedge funds and the side of their story. So for hedge funds like Melvin Capital, they were caught in a short squeeze. Okay, and they lost billions in January 2021. Melvin had to be bailed out by Citadel and Point72 with a combined $2.75 billion cash injection. Hedge funds largely stayed quiet in public, but the narrative was that Melvin Capital was losing fair and square, but the buy restrictions may have let them off the hook by cooling retail buying pressure at the worst possible moment. So this was the point here from hedge funds. Okay, then there were congressional hearings as well from February 2021. The US House of Representatives held a hearing with Vlad Tenev, who is the CEO of Robinhood, Ken Griffin, who is the CEO of Citadel Capital, Gabe Plotkin, who is Melvin Capital founder, and Keith Gill, who was the initial investor who started all of this story here, the YouTuber. Under oath, Robinhood maintained the liquidity explanation, but the public trust was already broken, and this event fueled ongoing debates about payment for order flow, market fairness, and centralized clearinghouse risk. Okay, so these were the bottom lines from all three one. So Robinhood's story was collateral requirements forced them to hold buy orders. Retail investors view this as hedge funds leaned on Robinhood to stop the bleeding. Hedge funds reality, Melvin and others were facing catastrophic losses, some covered by Citadel. The truth likely contains elements of both. Okay, Robinhood really did face collateral constraints, but the systemic structure, PFOF, broker clearinghouse relationships, made it feel like Wall Street interest came first. Okay, so this was happening in GameStop. Okay, so this is the case study of GameStop here. Okay, that what actually happened. I gave you the summary here from starting point that what actually happened and what people believe in. Okay, in today's time, the price has again came back to $20, $30 around this time point here. Okay, and what you can learn from these kind of cases here, that as a retail investor, okay, you have to be very, 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 very careful about your money. Okay, what you are, where you are investing, how much you are investing, who you are listening to invest here. Okay, now I'm not saying that the retail investors were wrong here, and I'm not saying hedge funds were right here. I'm not saying hedge funds were wrong, retail investors were right. All I'm saying here that it is about you, it is your hard earned money. Okay, and where are you investing it? You have to think a lot about it. Okay, because if you lose that money, then how much you will think about it after losing the money. You have to think exactly that amount before investing the money as well. It is your hard earned money, and once it is gone, it is gone. It will never ever come back to you. Not at least from this, okay? Not at least from that. So it will never will come back to you. So think very much clearly about your money and where do you want to invest it. Okay, so this was the case study of GameStop Saga.